Today I'm going to show you the exact two indicators that I use to become profitable trader, to get funded and to secure dozens of payouts, and also to generate multiple six figures in profits. And also these are not some paid indicators or some overcomplicated system that nobody can understand. They are just two simple and repeatable indicators that are proven to work. Because in trading, when you find something effective and repeatable, it all comes down to the process of repeating it and executing it consistently. And that is in the end how you make serious money. So let's get into it. So the first thing that I want to show you is I want to show you that this model actually made me money. So you can see right here, this is my tracker for all of my trades, and then you can see this month was really close to $30,000, and I can also refresh this page so you can know that this is 100% real because I have nothing to hide. So you can see here all the trades, all the losses, all the wins, and that is basically it. And also here is some mails from the payouts that I have received to my account so that you also know that I received loads of payouts. So let's get straight to the chart. So the first thing that we need to understand, of course, is the first indicator. So the first indicator that you want to turn on is ICT, kill zones and pivots. And basically when you turn it on, we can open it and you can just adjust everything as I did it. So the first thing is for the kill zones, we only want to have Asia and we want to have London. So put on the same hours as I did, and you can also put the same colors. And also if you want to copy other settings, I'm just gonna scroll through everything so you can just pause the video and just put everything the same as I do. So once we got that figured out and put on the chart, the first thing that we need to understand is that this indicator is going to show us the best liquidity level. So if we look on the chart right now, what we can see is we can see right here an Asia session. So this right here is an Asia session, and then we can see right here a London session. And basically, why is that so important to us? Because we know that at the high, so at this point right here, at the high of Asia and at the low of Asia, which was right here, there is going to be loads of liquidity. And what liquidity is? Liquidity is just stop losses. And why do we know that there is going to be a lot of them on the high and on the low of that session? Because within the session hours, there is a lot of volatility in the market. So a lot of traders got into positions during those hours. And where do they put their stop losses? They likely put them at some kind of high or some kind of low. So in this case, they're going to put them at session high or session low. So what a market is really likely going to do, it is going to sweep highs and lows of the session to basically extract that money out of the market. Same after that with a London session. You can see that right here, this was the high, and then we had the low of the session. What market did is first swept all of these lows and swept, of course, the London low. And then after that, when we basically came down there, what we did is we completely reversed and went on to sweep this high. So we basically did a sweep of the low and then sweep of the high. And also for the Asia, we did the same thing. We did the sweep of the low and then we did the sweep of the high. So what is this indicator going to basically provide to us? It is going to provide to us where to trade from and what to target. So when this indicator marks out the session high and the session low, which is basically going to be something like this. So this is going to be the first session. What we want to wait for is the sweep of the high and then sweep of the low. Then we are going to have the second session, which can look something like this. And what we are going to wait for is sweep of high and then a sweep of low. So it is always going to be the same thing. We are going to want to see sweep in both directions. And then of course, same thing all over again. And then sometimes what we can do is we can maybe leave both highs to the upside. So we sweep both lows of the both sessions, and then we can easily go on to target two session highs because they have really high probability of getting hit. And the next indicator is going to be higher time frame power of 3 indicators. So what is that indicator going to do for us? It is going to show the 1 hour candle on the lower time frame. So while we are at the 5 minute, 1 minute, 2 minute, whatever time frame, we are always going to see how is the 1 hour time frame looking like. So you can see right here, these are my settings. So you can just kind of copy everything. You also have this, and that is basically it. It's really simple to set up. So for example, this indicator is going to be used for knowing where the manipulation is. So the first thing that we need to understand is that every single candle, especially on the higher time frame, so if we go to the 1 hour chart, you can see that, for example, this first candle right here that happened. So if we go into the replay mode and to that candle, what this candle actually did is the first thing that it did when it opened. We had some kind of consolidation, and then after that what we actually did, you can see that we manipulated. So you can see this is the wick right here. This is the manipulation of that candle. So that wick happened to the upside, where we basically manipulated all of these highs right here. You can see all of the highs from before. And then after that, you can see the wick to the downside. When we got the entry model down, you can see that after it, we started going really hard to the downside. In the end, managed to close something like this, which just means that this candle had a normal consolidation followed by a sweep to the upside, manipulating everything, gave us an entry towards the downside, and then just followed by a distribution towards the downside and manipulating the rest of the low. So every single candle in the market is going to have this. So it's really important for us to purely understand when it's happening so that we can benefit off of it. So here we are at the first example right now. So right now we are going to figure everything out. So the first thing that we learned about is going to be how we are always going to create these ranges, and we are going to want to hunt both sides. So for example, Asia session, you can see right here, we took out the low, but for the high we still didn't take it out. So you can see it is going all the way till there. Then after that, what we have is we have a London range right here. So we left both the high and both the low. So for example, since we are really close to the low right now, what we can do is we can probably sweep this low, and then after that just completely reverse to target these highs in the market. So why is that logical? Because you saw that the market all the time likes to hunt these levels. And then how are you going to pair the higher time frame PO3 candle? So basically we are just going to wait for that expansion towards the downside followed by a wick. Then we are going to know that the distribution is going to happen to the upside, which is basically going to just leave us with a candle body to the upside, of course, hunting everything. So the thing that we want to do is we want to scale down to the lower time frame. So for right now, you can see that we still have this candle right here that has opened on the 1 hour time frame. So what we want to see is we want to see, of course, a manipulation to the downside of everything, followed by a entry to the upside, which is also going to leave a nice wick on this candle. Then we can also expand to the upside. So that is going to be the whole logic. We do not want to see candle manipulating to the upside, and then when it also expands to the downside, for us to start looking for the entry. So we want to see a manipulation first, and then we want to see an expansion towards the upside. So for example, if I fast forward the market, you can see that right now we expanded towards the downside, so we never manipulated to the upside, we just first manipulated to the downside. And now the entry model is also going to be really important. So the entry model that we will be using is the inversion of the fair value gap, so the disrespect of the fair value gap. Why is that logical? For example, this right here is the fair value gap, so 3 candles, and basically we have a hole in the market. So fair value gaps are usually going to want to be respected, and we are going to reject the price with fair value gaps, but we want to see a disrespect of the fair value gap, so a closure above with a body, and then we know that the market does not want to respect it and it wants to expand to the upside, for example. So the way we are going to look for it is we are going to look for it from the 1 to 5 minute time frame. So whatever time frame has a fair value gap, we want to see the biggest time frame failing. So 1 minute, you can see that it has fair value gap. Then the 2 minute time frame, you can see that it also has a fair value gap. So from right now we are looking for the entry on the 2 minute time frame. We also have this fair value gap up here. Then on the 3 minute time frame, do we have a fair value gap? I need to skip some more candles because this candle still didn't close, and you can see that we do not have any fair value gaps on 3. And on 5 we do not have any fair value gap. So the 2 minute time frame is going to be the time frame that we enter based off of. So if I fast forward the market, you can see that we still didn't close above, and we also tapped into this one. So we want to close above the last one that we tapped above. So if I fast forward the market even more, you can see that right there we got the closure, and also what happened, you can see that we made that manipulation towards the downside. And then also if I scale out to the 50 minute time frame, you can see the exact formation right now. So we swept all the lows in the market that we could. You can see the wick that we actually made to the downside. Of course, now we want to see that final expansion towards the upside to take all of these highs right here in the market, and also to take out these highs. So if we go back to the 2 minute time frame, we basically now have a proper entry to the upside. So if we take a long setup right here, we can put our stop loss below the fair value gap that we inversed, and then we can target whatever liquidity we want to the upside, or we can actually proceed to target this high. So of course, this is insane risk to reward. We can also maybe get our stop loss a little bit bigger to the downside like this, so just that we have some more room for our trade to play with. Of course, it's all up to you. You can target these insane risk to rewards, you can scale down a bit, you can maybe make your target smaller. But let's see, for example, how is this trade actually going to play out, for example. So if I fast forward the market, you can see how that candle is expanding to the upside as we talked about, and then in the end you can see how the candle is looking and going all the way to the upside. So here the new candle opened, and now the new candle, what is it probably gonna do? It is going to expand and manipulate maybe to the upside and then maybe start distributing. But that is not our model. Our model is to follow sweeps of session highs and lows and then target the other side of the session highs and lows. Alright, so this is the market right now. So you can see the same thing as the last time. So right now we swept the Asia high, but we left the Asia low down here. Then after that we have London high and London low. So right now we really do not know whether we are gonna sweep to the downside or to the upside, but we just know when we sweep something we want to target the opposite direction. So what do? We scale to the lower time frame. So for example, we can go to the 2-minute and then we can wait to see what the market actually will do. So right now looks like we are gonna sweep to the upside. Also, if you pay attention to this candle, you can see how we opened it right here. We really didn't make manipulation of anything, and right now we are expanding to the upside. So after we do that, if we sweep this high, we can probably expect a manipulation and then a distribution to the downside. So let's see right now if that is going to happen. So looks like we swept that high right here. This is the fair value gap on the 2-minute time frame. On the 5-minute time frame we only have this one right here. So right now the point is, if we tap into this fair value gap before we inverse the 2-minute one, then we want to enter from the higher time frame one. So if we close like this, then we are good to enter, but if we tap into it, then we want to wait for the 5-minute to close. So right now we still didn't inverse it. Let's see if we are going to get the entry. So still not, we just wigged through it. Okay, and right now what we actually did is we made a new fair value gap right here. So that is perfect. Right now we are waiting for it to inverse, and what happened is we tapped into the 5-minute fair value gap before we inverse the 2-minute one. So exactly the thing that I told you. So right now what I want to see is I want to see an actual inversion of the 5-minute time frame fair value gap. So if we wait for that to happen, right now it still didn't. So we are just waiting for us to actually disrespect the 5-minute fair value gap. So we are still waiting. Let's see. So is this the close? And there is the closure. So what we did is we entered based on the closure right here. What we do is we put our stop loss right here. We can put it on some high up here, but it's completely up to you. But right now what we can do is we can target this slowdown here, for example, or when we have 2 session highs and lows in the market, what you can do is you can also target all the way to the downside to that final low. So for example, right now if I fast forward the market, let's see what will actually happen, and you can see that in the end the thing that we talked about is we got that distribution towards the downside that of course created a huge body, and our trade just worked perfectly to our favor. Okay, so I hope you liked the video and learned something new. If you did learn something new, you can subscribe to the channel, of course, so you never miss another video, and that just shows me that I'm doing something good. Also, you can like the video. One more thing that I want to add is right now at the moment there is still some one-on-one spots available, so you can go down there, check out the link in the description. If you feel like that will benefit you in the trading, you can check it out, see if there is still spots left, and you can book a call where I basically check if you are a right fit for it. So with all of that being said, I hope that you enjoyed the video, and I'm gonna see you in the next one. Peace.